Why is shorting on the way out in this market? What technology stocks am I buying? Hang on.
This is not financial nor professional advice. This video is for entertainment only.
Hey everyone, why have I stopped shorting? Because I believe the market is starting to fundamentally change. I shorted on Wednesday the 24th, and I started out the day doing shorting. Now, when I do shorting, I don't do anything else, just because the mentality is so different from investing. It's basically short-term day trading and jumping on the ups and downs and playing the hills and valleys. And I'm used to doing this so much with SQQQ that even though the market went up on Wednesday, I made money. I made like $3,000. But I had to pour so much capital in and watch it like a hawk. And it is so stressful, okay? I'm really tired of doing it. I actually don't like shorting. I want to be a more long-term investor. That is my bent. I'm probably more of a swing trader in some ways, but I'd like to go a year or two or three or five if I got a really good stock. But this market just hasn't allowed that for about the last 18 months. You know, I've made over 100,000, close to 200,000. It varies according to how the market is going, of course. But I think I've totaled about 130,000 shorting the market. And that's making up for the losses I took on investing. Because for a long time, I was still trying to invest, I think until April. And so I made up for those losses, plus made 130,000 shorting. So I was reluctant to give it up. But I think it's time to give it up. And I think the reason is a lot political. I think we have a good president who's accomplished phenomenal amounts of legislation in 2 years. They passed the infrastructure bill, and also they passed the climate, inflation, taxes, and health, and he even included some relief for the drought. And now today, the president announced that he's going to forgive $10,000 of student loans. For all of you out there that have had student loans and have that weighing down on you, well, that just got relieved by $10,000. What a country. So my experience on Wednesday, August 24th, was that I made a little money on shorting, but I basically saw there was diminishing returns to doing it. So I thought I would buy a dozen stocks, okay? And I layer it in, and I start with the most stable things that I know. And of course, the most stable thing I know is Tesla. And Tesla, its symbol, of course, is TSLA. It has a forward price to earnings of 65, which it sounds outrageous, but for Tesla, that's actually getting low. The forward price to earnings is below 100. It used to be infinity when I first started investing in it. But their growth rate is 50%. And I think they're going to have a good year. And it's just a good long-term bet. The second one I laid in as a foundation is, of course, Apple, AAPL, and they have a price to earnings of 27, which is a little on the high side, and our earnings growth rate of 18%. But hey, they're a $3 trillion, or they're a $3 trillion company. So I guess, you know, we can't expect the growth rate to be too outrageous. But if it's good enough for Warren Buffett, it's good enough that it's Warren Buffett's #1 investment. I think like 40% of his total stock portfolio is Apple. So I think it's probably a good bet to lay that in as a foundation. Tesla shares are tripling tomorrow on the 25th, and so I'll have roughly, I bought 334 shares of Tesla, knowing that it was going to triple and that I would have a little over 1,000 shares, which is what I wanted to do with that company. Next, I bought my two favorite computer stocks, and Clearfield Incorporated is a fiber optics company. Its price to earnings is 44, which is a little pricey, but it has an excellent growth rate of 40%. And what I've found with these high technology companies is that growth rate trumps price to earnings usually, at least in the short run. And I think there's a demand for their products, so I think it's fairly safe. But my favorite, maybe out of this whole list of stocks, is Super Microcomputer. SMCI is its symbol, and it has a price to earnings of 12. Unbelievable. And its growth rate is 37%. And they make mainly computer servers. Next, I bought a semiconductor equipment company that makes equipment for semi-manufacturing companies. They make the equipment that makes the chips. And that company is Axcelis, AXCELIS, and its symbol is ACLS. Its price to earnings is only 15. It has an excellent earnings growth rate of 34%. AHR Test Systems, it's spelled AEHR, and its symbol, of course, is also AEHR, is the second semiconductor equipment maker that I bought, and its price to earnings is 20, and it has an excellent growth rate of 40. The semiconductor manufacturing companies that I bought were NXP Semiconductor, whose symbol is NXPI. They have a price to earnings of 14 and an earnings growth rate of 30%. I also bought ON Semiconductors, and its symbol is ON. Their earnings growth rate is 39%, and their price to earnings is only about 17. So those are two well-positioned chip manufacturing companies, which we need. And the country just passed, in addition to all the other things I mentioned earlier in this video, the country just passed a massive semiconductor production bill so that we make more semiconductors in this country, which are going to propel these upwards. Today, NVIDIA reported earnings, and they went down, but there's a reason for that. NVIDIA makes chips mainly for gaming and for crypto mining. Now, crypto mining is going to decrease because Ethereum is changing, so Ethereum won't require as much mining, and that's the type of semiconductors, some of the semiconductors that NVIDIA makes. And also the gaming has gone down. So believe it or not, when people need necessities, they stop buying as many games. There seems to be a sale going on for advertising agencies. So I bought Digital Turbine, whose symbol is APPS, apps, APPS. Its price to earnings is 12, and it has an outstanding earnings growth rate of 40%. And I also bought HartHanks, whose symbol is HHS, and they do all manner of advertising on the internet and a lot on social media. They do the production and the marketing and everything involved with advertising on the internet. And its price to earnings is only 11, and it has a 33% earnings growth rate. So these are very, very solid companies. This is a chart of my three favorite solar stocks. Canadian Solar is in purple, Rays is in blue, and TAN is in green. Canadian Solar's symbol is CSIQ. It's had an outstanding month, that's for sure, and I think that's going to continue. Its price to earnings is 13, and its earnings growth rate is 26%. TAN is a solar ETF, of course, and you don't really get those statistics for the ETFs. But I think it's done well. I mean, it doesn't look as well. It's just because Canadian Solar is actually blowing the tops off the charts. But Raise is doing well too. And Raise is a more global solar ETF, and they benefit from the strong dollar. So these are all three outstanding investments. Canadian Solar price to earnings is only 13, and its earnings growth rate is 26, and I think they're going to do very well. So that's all I have for you, which is more than enough, I'm sure. Be sure to hit the like and subscribe button if you haven't done that already. Hit the little bell so you can be notified of future videos. And I'll keep trying to bring you what's happening in my world, and hopefully it's relevant and helpful to you. Thank you.